Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 400 on November the 7th, 2025. I'm your host, Eric. And in this week's show, we'll cover the trades from last week on FuboTV Inc, Nokia, the ADR, and the iShare Silver Trust ETF. And we discuss three new trades on EOS Energy Enterprises, Bitfarms Ltd, American Airlines, and Quantumscape Corporation. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on today's show, or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the market finished the week lower. The Dow Jones Industrial Average lost 731 points, closing at 46,987 points. The S&P 500 index lost 111 points, ending the week at 6,728 points. Now it's time for the topic of the week. Topic of the week this week is 400 episodes. To be quite honest, when I started this journey, I thought I might stop at 52. At 400 episodes, you might think I'm getting tired, but I'm just getting started. There are a number of things that I have not yet accomplished. The journey has been long, but the vision has not waned. Next week, I'll be launching a community membership that will give daily content and have full access to all of my course videos. I will also start adding videos on YouTube with me actually on the camera. Finally, I'll be growing the number of listeners to the podcast and the community at large through the sale of a book I've been working on. So in the new year, there'll be even more additions to the Weekly Option. So I'm super excited, and I hope you are too. Thanks for following along with me on this journey. On this week's show, I'll be introducing a new trade. I discussed the cash secured put trade last week. This week, it makes its debut on the show, and I anticipate many of you will find it a very profitable strategy, especially when paired with the covered call. Now, that's it for the topic of the week. Let's get the show going. So we're going to start off our trade review of last week's trades with the covered call. We looked at FuboTV Inc, symbol F as in Foxtrot, U as in Uniform, B as in Bravo, O as in Oscar. At the time, the stock was trading for $3.65 per share. I looked at buying that stock and selling the November 4 call at 35 cents, hoping for a return of 19.18% in 3 weeks. Well, shares of FuboTV grew 23 cents, closing at $3.88 on Friday. The call option that we sold lost 15 cents, leaving us with a net profit of 38 cents if we were to close the trade out immediately. Now, just to be clear, locking in a profit of 10% in 1 week is pretty good. Now, of course, this trade has another 2 weeks left until expiration, and if stock continues pushing higher, we might capture our initial planned return of 19%. Now, if the stock expires for less than $4 per share, we'll simply sell another call option next month, likely extending our return significantly beyond that 19%. So the main thing we want is for the stock to stay above our break-even point. And by the way, if you hold on to the stock through expiration and sell another call option next month, that actually lowers your break-even point even more. So right now, the stock is well above the break-even point, so no adjustments are needed on this trade. It's working out as planned. Next up, we have the credit spread on Nokia, which was an ADR, symbol N as in November, O as in Oscar, K as in Kilo. At the time, the stock was trading for $7.13 per share. I looked at selling the November 7 6/2 put spread at 17 cents. That could give us a maximum possible loss of 33 cents per spread. Well, shares of Nokia fell 30 cents, ending the week at $6.83 per share. The out-of-the-money put spread that we sold is now just at the money. The stock price is between the two strikes of our spread. More importantly, The stock closed the week right at our break-even point, so it's time to have a plan. If the stock was to rally next week, I won't need to make any adjustments. If it proceeds to head lower, rather than just watch the spread get devalued, I'll look to sell an out-of-the-money call spread to create an iron condor. With 2 weeks left until expiration, it's important to have a plan and the confidence you need to execute it when the time comes. This will help minimize the loss or possibly even lock in a profit. So always just make sure you do the math before you make an adjustment, and always be ready to make that adjustment if needed. And finally, we had our debit spread last week. We looked at the iShares Silver Trust ETF, symbol S as in Sierra, L as in Lima, V as in Victor. At the time, the stock was trading for $44.34 per share. I looked at buying the November 43.5, 44 call spread for 32 cents, hoping for a maximum gain of 18 cents, or that's a 56.25% return in 3 weeks. Well, shares of the Silver Trust ETF lost 43 cents, closing at $43.91 per share on Friday. The in-the-money call spread that we bought is now just at the money, with the stock price between the strikes of our spread. Now, the stock price is still above our break-even point, which means that we don't need to make an adjustment on this just yet. As well, the stock price is just 9 cents below our short strike, which means that we've got a good chance at seeing this trade expire fully in the money anyway. Now, the alarm is definitely sounding to make sure you're prepared on this trade. There are any number of adjustments you could make to minimize the possibility of loss on this trade. So just always do the math to figure out what makes the most sense and go from there. For now, no adjustments are required. Now, the new trades presented on today's show will use the November 21st expiration date for monthly options. The shortened time frame makes them inherently more risky due to the limited amount of time to make adjustments. So as mentioned earlier, we will start discussing cash secured puts on the weekly show starting today. Now, we're going to start off our new trades this week with the covered call on EOS Energy Enterprises, symbol E as in Echo, O as in Oscar, S as in Sierra, E as in Echo. The stock ended the week at $18.26 per share. I'm looking at buying the stock and selling the November 18.5 call at $1.73, hoping for a return of 10.79% in 2 weeks. Now, you enter this trade by buying stock for $18.26 per share and selling the November 18.5 call at $1.73. This trade makes the most money if stock prices finish above $18.50 per share. The break-even price on this trade is $16.53 per share. In real terms, that stock purchase will require $1,826, and you'll collect $173 for selling the option. Next up, we have our cash secured put. I'm looking at Bitfarms Ltd, symbol B as in Bravo, I as in India, T as in Tango, F as in Foxtrot. The stock ended the week at $3.67 per share. I'm looking at selling the November 3.5 put at 33 cents. That would create a return of 9.43% in 2 weeks. Now, you enter this trade by selling the November 3.5 put at 33 cents. This trade makes the most money if stock prices finish above $3.50 per share. The break-even price on this trade is $3.17 per share. In real terms, you'll collect $33 for selling the put option, and you'll have $350 locked up in case you need to purchase the stock. Next, we have our credit spread on American Airlines, symbol A as in Alpha, A as in Alpha, L as in Lima. The stock ended the week at $13.66 per share. I'm looking at selling the November 13 put spread at 16 cents. That could give us a maximum possible loss of 34 cents per spread. Now, you enter this trade by selling the November 13.5 put at 43 cents and concurrently buying the November 13 put for 27 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $13.50 per share. The break-even price on this trade is $13.34 per share. In real terms, you'll receive $16 per spread that you sell and have $34 at risk. And our final trade on today's show is going to be the debit spread. I'm looking at Quantumscape Corporation, symbol Q as in Quebec, S as in Sierra. The stock ended the week at $16.61 per share. I'm looking at buying the November 16 half call spread for 32 cents. That could give us a maximum gain of 18 cents, or that's a 56.25% return on capital in 2 weeks. Now you enter this trade by buying the November 16 call for $1.79 and concurrently selling the November 16 half call at $1.47. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $16.50 per share. The break-even price on this trade is $16.32 per share. In real terms, you'll pay $32 to enter the spread, and your maximum gain is $18 per spread. So that's it for today's episode 400. I'm still just mind blown at this whole journey, the entire process from start to finish, from having as few as 2 or 3 listeners to having as many as 1,000. And I still am amazed that you guys listen to a full show on option trades and option trading. I love it. You guys are my people, and that's why I want to create a community where we can all share ideas, get encouragement, and continue just doing what we like to do best, which is make money trading options. So thanks for joining me on this journey. I hope you end up joining as well in the community. There'll be more details to come next week. For now, have a wonderful weekend, and as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.